Paperwork isn't really the problem. It's the time commitment in that short window.
What has been your biggest frustration with the 1031 then?
There's no sense of urgency behind the 1031 groups. So, when you need things to happen by deadlines and you need them to happen quickly and you need paperwork pushed efficiently, it's a lot more sweat equity than you may have initially realized. And that may be what you're alluding to earlier, is the amount of paperwork isn't really the problem. It's the time commitment in that short window.
Yeah. So, we asked this question a lot on this show, and it's not that we don't like the 1031. We do. I mean, the 1031 is great for certain people, right? Where we find it has some restrictions and some challenges is that in a fully, peaking market, right, where you're just totally ascending and you are liquidating an asset at the peak, right? And then literally at the 6 months later, you're buying at another peak. It's hard, and you have 45 days to identify. You have 180 days to close. And if you don't find those properties, and you got to go back into real estate, if you can't find an up leg, you got to pull it out and take the tax. A lot of people have that. We've also heard from a bunch of different, syndicators and whatnot, that if everyone doesn't want to move with you, then the 1031 is shot, right? And it kind of screws the pooch on everyone if you're trying to move a team over into another property. And so there are some challenges with it, right? If you can find an up leg that makes a ton of sense, and it's a great deal, it's a slam dunk, like, yeah, we're like all for it. Like, it's phenomenal, especially if you're trying to upgrade. But we've just found that those challenges. And so what we use is the Deferred Sales Trust, which is just an alternative to a 1031. And it allows you to liquidate the asset, and not just real estate. It can work for business or stock or crypto or primary home or commercial real estate. It doesn't matter. And it's like kind of agnostic. So you don't have to go back into real estate. So you can sell, a primary home, and you don't have to do a 121 exclusion. You can defer all the capital gains tax. You can invest it in stocks and bonds and just wait and keep it liquid, and, some Bitcoin or whatever, right? If it's at 25,000, like, right, last week or whatever the case is, right? And then when you find that great deal, then you can go back into real estate when you want. And so it also works great for syndicators, because you can break up the syndication, and each person, Mary, John, and Joe can each, do their own deferred sales trust, or they don't have to, kind of like what you were talking about with the 1031. So it's just less issues, less paperwork, less timelines, less all of those things that gives you flexibility, control over the timing and diversification and cash flow and all stuff. So that's kind of like our what we have kind of since graduated to above and beyond the 1031, and that's why that's kind of what we do. And you guys can find out more about that by going to capitalgainstaxsolutions.com.